So I'm sitting here with Neil Shelton with Insure You Colorado because insurance has been such a crazy component in real estate right now. So I'm so excited to talk to Neil. Neil, you've had your insurance brokerage now based in Westminster, Colorado
Yep.
since 2017.
Yeah, that's right.
Right? And I know we refer a lot of our clients to you because you have the opportunity to sort of shop some of the big carriers,
Yep.
right? So my understanding of insurance from what I tell my clients is there's the big captive agents, the State Farms, the Allstates, the farmers, right? Yep. And then there's the brokerage model, which is what you do. So you shop the Travelers, the Nationwides, the Safecos. Am I on the right track
Yeah,
there?
yeah, on the right track.
Okay.
We actually have access to a couple. We have Allstate, which is one of the national carriers as well.
Cool.
But yeah, so you hit it on the head. Captive agents, they can only sell their product. Us as a brokerage, we have access to multiple products. That way we can make sure we're always finding the best price and value.
Cool. So you're actually theoretically able to get insurance at a reduced rate comparatively to captive. Is that a fair statement?
Honestly, the market ebbs and flows.
Okay.
It's like this. Some years the captive agencies, they clean our clocks. And
Got it.
other years we come back and take market share away. So
Okay.
it's truly cyclical.
Depends on the year.
Yep.
Okay, cool. Well, let's talk through this like wildly popular topic. Like, tell me what is going on with insurance right now.
The market is crazy right now. We're seeing restrictions galore, carriers dropping surprise, terrible news bombs on us left and right. And a lot of it has to do with just the amounts of losses that they've taken over the last couple of years. It all kind of kickstarted locally here in Colorado with the Marshall Fire in 2020. 1,000 homes in the suburbs of all places just boom, vanished. Yeah. So that really started kicking everything off. We had just come out of COVID. So COVID inflation stacked on with that just caused for the perfect terrible storm for insurance and restrictions. That coupled with one of the larger hail losses we've had last year has just caused insurance rates to climb astronomically. I mean, we're seeing carriers take 50 to 100% rate increases consecutive years, and people are starting to really feel that pinch, especially when you're combining that with property taxes going up.
Oh, yeah. What would you say the baseline insurance premium is on like an entry level single family home, 600,000, that first time home buyer? What is like the least expensive premium that you've seen or one that's like still considered affordable?
I wish I could give you an answer to that, but there's so many variables that go into insurance rates. Imagine just a big witch's cauldron and we're dropping ingredients in there. The person's credit score, the zip code of the home, the fire score of the home. Has the person had any claims in the past? Just all of those factors go into determining rates. So that can cause thousands of dollars of swings in premium. So I wish I could give you a number, but it literally could be, $2,500 to $10,000 a year.
Wow.
Based off
depending
of all
on
those different factors.
Things.
Yeah.
And what's interesting about that is on our side, we're like, do it with the higher rates. We're doing like a qualifying puzzle every day where we're basically trying to qualify people non-contingent. We're trying to like buy their interest rate down so they can qualify. And the insurance premium has always been that thing that we can play around with. Like maybe I could call Neil and shave a few dollars off, but that is not the case right now, right? So maybe I should be overestimating versus underestimating because those costs are going up.
Yeah, for sure. Definitely. There's still some flexibility with premium, but that's going to require sacrifices, maybe not having additional important coverages. But you can waive certain coverages or you can opt for a higher deductible, which definitely can help with pricing.
Cool. What advice would you give agents that are writing offers? The insurance termination deadline is, in essence, hey, you need to make sure you can get adequate and affordable insurance by this date. What advice would you give agents that you're just seeing with real estate transactions as it relates to insurance?
Yeah. Hammer the insurance early and often. Don't leave it till the last second. When I talked earlier about restrictions carriers are putting on, they're scrutinizing almost every home that we're issuing now. In the past, we could write a home, there's maybe a 10% chance that it was going to get inspected. Now it seems like they're inspecting every home's inspection on the insurance side. They're going out looking at home foundations for cracks, window seals, chip paint, chip siding, roof condition, tree overhang, stuff like that. And if a carrier does not like the condition of the property, they will cancel that policy and leaves people in a pickle. Wow. Or they won't even allow us to write the policy. And, that can obviously cause problems if you're past your insurance subjection deadline and no longer have that tool in your pocket.
So people get a quote up front. Let me just understand
Yep.
this. They close on their house.
Yep.
Then the inspector goes after closing,
Yep.
looks at the property and says, no, I don't like these components, and they cancel the coverage.
Yep. That's right.
Wow.
Now, most of the times they'll give the client some time to remedy it, but
Okay.
the last thing you want to do is put a client in a new home, think everything's perfectly fine. They get a notice from the insurance, hey, your roof is trashed. We're going to cancel this policy in the next 30 days unless you replace your roof.
So how do consumers protect themselves from that? Are there things they can be doing in their inspections and things like that to ensure that they're not in that boat?
Yeah, you hit it on the head. Get the home inspection.
Okay.
Trust the realtor, trust the inspection report, and if there's something that there is being called out on there, take action, because it'll only hurt you in the long run if you don't.
And the roof has always been such a big contributor to the premium cost, right? Like,
Yeah.
so the age of the roof is an important thing. What is considered an old roof?
Old roof now is 10 plus, which
10
is
plus.
crazy. That's for
Okay.
your standard asphalt shingle. If
Okay.
you get up into a concrete roof, they kind of start looking into the 20 to 25 year range as being what they would consider old. So if you go out and look at a home right now and the roof's 12 years old, it's going to cut half of our carriers in half that we even have access to. And the ones that will take it are going to put the home on a depreciation schedule, essentially kind of like vehicles. If you have a 2002 Honda Civic and you go and you wreck it, they're not going to buy you a 2024 Honda Civic.
That makes sense.
Yeah. So that's what they're doing with roofs now. They're starting to put payment schedules in place, so they're not doing full replacements on roofs that are over 10 years old.
And I know that you have the ability to like look in a system and see the estimated age of a roof. Can real estate agents do that too?
There's a tool out there. I believe it's called BuildFacts. We have our own insurance version of that. I think it's a subscription type fee that agents have access to, but it will show any permits that were pulled within a duration of time.
BuildFacts?
Yep, BuildFacts.
Okay, so it's like a car
Yeah.
sort of same thing.
I think it does a retrieval with county assessors to see what permits have been pulled on a property.
That's fascinating. How much does that cost monthly? Any idea?
No idea.
Okay.
This is not an endorsement.
Okay. Okay, you're not a sponsor of that
Not a
company.
sponsor.
Okay. Okay.
But
Okay,
they do
so
a great job.
age of the roof. So maybe when you're going to your inspection, you find out that it's a 9-year-old roof.
Yep.
What recommendation? Like ask for a new roof if you can, or
So yeah, a 9-year-old roof, you're still going to be eligible with most carriers as long as the roof is in good shape. That's ultimately one of the most important factors. But just know that you're probably going to have full roof coverage for one more year, meaning it's called replacement cost, meaning that if the roof was destroyed tomorrow, they're going to replace it with a brand new roof without any depreciation or payment schedule. The second it turns usually 10 or 11, it gets flipped onto that payment schedule, and you're going to have to come out of pocket with a lot more money. Heaven forbid there is a hail or a wind claim.
Got it. Okay. Let's talk through attached properties really quick, because I'm hearing like HOAs are also struggling with insurance costs. I know that the loan agencies have made a lot of changes as it relates to insurance.
Yep.
Like I had a deal recently that the condo was not eligible for conforming or conventional financing because of the amount of the deductible. So I'm curious about that because that's a new development. So what are your thoughts on that?
Yeah, so what I believe what you're probably talking about here is over the years, the weight of a claim has been passed off to the individual unit owners. Let's say you have a row of 6 units, for example. What used to happen is a hailstorm would roll through there. Hail, they'd pay about $1,000, $5,000, maybe a $10,000 deductible. All those roofs are getting replaced. All the carriers are getting destroyed with hail claims. So now they're slapping percentage-based deductibles on top of these condo associations and stuff like that. So now, a hail claim that would have cost $10,000 is now costing $100,000. So at that point, it's almost like self-insuring the roof. So they're passing off these expenses to the individual unit owners via special assessments. And that's in turn causing what used to be a $200 to $400 a year condo policy into a $1,000 to $1,500 a year condo policy, because that risk is now being passed off to the homeowners.
So is it kind of converting it from an HO6 to an HO3?
No,
Is that okay?
It's not. It's still an HO6, which is the problem. These HO6s weren't built to handle that much wind and hail exposure, and now they're all getting crushed with these wind and hail claims because the master association deductibles are so high. They're just passing that exposure on to the unit owner. We are seeing a lot of dissolving of HOAs. Hey, we're not going to cover the structure anymore because of this, which then in turn requires each individual unit owner to have an HO3, and then that in insurance jargon just means you're insuring your whole portion of the structure. It's not just the studs in anymore. You're insuring, your walls, the exterior rebuild, the roof, everything along those lines.
Yeah, so I'm fascinated by that because let's say that the condo complex says we're no longer insuring the dwelling,
Yep.
and it falls on each of the unit holders. But then there is a disaster and the whole building burns down. Like, how does that work with rebuilding the dwelling? All the insurance carriers go together and fight over the cost.
Yep, pretty much. It becomes a disaster. You can't force everyone to have the same carrier. Our carriers even tell us it sucks when there is a circumstance like that, because then they all do have to determine, if there's a party wall, meaning the two units share a wall, then hey, we have to split the cost there. So it definitely gets murky, but unfortunately there's nothing people
It's just
can
the
do.
reality of the situation.
Yeah.
And it's better to own a home than not own a home. But it is like when you're getting into home ownership, you have to consider like the potential for increasing costs in the future. And insurance for sure seems to, do you know what the percentage of increase per year that we're currently
For home insurance?
Yeah.
Yeah. I don't know firm facts, but based off of what we've seen lately, in the past, we were seeing like 6 to 15% rate increases year over year. Now we're seeing 40, 50, 60, 100% rate increases. 120 we've seen from some of our carriers. So that's unfortunately one of the non-fixed costs, that and property taxes, that people definitely need to obviously be aware of when they're purchasing a home.
Neil, is
Yep.
it a good strategy if I buy a home and I get like a premium that I'm comfortable with the rate, and let's say my insurance costs start going up, is it a good strategy for me to just keep changing carriers every year?
It never hurts to shop. With the market being cyclical, yeah, it can help. We've noticed kind of like a 3 to 4 year, if you're with the same carrier, that's usually when it's time to start taking a look again.
Yeah. Okay.
Yeah, but and can it hurt you? In the past, longevity with the carrier meant a lot more. Unfortunately, now with all the data, everyone's in just a piece of an algorithm, and if you don't line up with the carrier's appetite or risk tolerance at that point, they don't hesitate to unfortunately let people go.
You mentioned that there are certain carriers that are getting more restrictive with the underwriting process. Help me understand that more.
Yeah, so some of them, for example, won't even allow us to present a quote until we send 4 side or photos of all 4 sides of the home, pictures of every single room in the home. And at that point, they'll say, yeah, you can quote it. That doesn't really fly, especially if you guys need a quote from us pronto, to wait 7 to 10 business days for a turnaround like that. So that's one of the biggest restrictions. We're seeing a couple carriers that are doing that right now, and that it's not ideal.
I mean, I guess ultimately, if that's where the industry goes, that will just be a part of the home inspection, right? Like taking those pictures. I don't know, maybe.
Yeah. So, some of the carriers will do this inspection after, again, the policy's been issued, and they'll do that via a mobile app. They'll say, hey, client, here's a little link. Go here, upload all the photos of your home, similar to that exterior inspection. If we don't like what we see, we're going to tell you to, fix it, or we're going to cancel that policy.
What advice would you give for Coloradoans that are looking to invest in a property? A lot of people want to be up against the mountains, right?
Yeah.
So in the Goldens and the Morrisons and the, Evergreens,
Yep.
what advice would you give to those people?
Yeah, it's I never want to deter people, but it's very, very hard to qualify for home insurance in those areas right now. All of the carriers use brush fire mapping. After Marshall Fire, all the carriers' risk for anything in the foothills has shrank massively. So, basically they've all pulled back miles from the foothills, and now a home that was eligible in the past is no longer eligible, which is causing people to have to go to what's called the surplus markets. And these are the carriers that you typically, haven't heard of. They're capping the policy at, maybe $750,000. So it could be a $2 million house, but they're saying, hey, we're not going to offer you anything more than $750,000 of coverage.
Wow.
Which again, in lending and real estate land, that's not going to fly for a loan. So that is one of the challenges with homes in the foothills right now. There are a few carriers that are still writing. I heard of one the other day that was requiring $100,000 deductible for fire. So, you're taking a lot of the risk on again.
Yeah, that's an interesting way to solve to it. That like,
Yeah.
and then do you have to prove that you have 100,000 or?
The carrier doesn't care. I mean, when they're writing something, I guess that'd be more.
They wouldn't invest, right, in the
the
rebuild,
carrier,
right?
Yeah,
they wouldn't invest in the rebuild if they don't have the
basically the carrier's going to say, hey, here's what we had your home insured for.
Got it.
Let's just say it's 750 and it was worth $1 million. If you didn't have that 250 to come up with and rebuild that home, they're going to cut you the check and say, do what you can.
Got it.
With this. So,
got it. That's fascinating.
Yeah.
Coming off the Marshall fire, were you involved in any of those discussions with some of those people? Like, I'm so curious. I heard a lot of people were underinsured.
Yeah.
How do we protect our clients or our friends and family from getting into that situation? Like, is it an annual call with your insurance agent to make sure you still are adequately insured? Or how did they end up like that?
Yeah, basically what happened with Marshall Fire is it was just the perfect storm, a windstorm, obviously, wildfire in the suburbs, and then, like I said earlier, the COVID inflation. It was just the worst possible timing for something like that to happen. So a lot of these homes that might have had adequate insurance, even 6 months earlier, are now significantly underinsured. A lot of the policies, from what I've heard, are more are older policies that loyalty to some carriers that are stable forwards in the market, and people never maybe they didn't take inflation guard like they should, or the policy didn't have inflation guard, or they didn't have what's called extended replacement cost coverage, which is excess coverage that goes above and beyond your policy limits. It's something that everyone can typically buy as an add-on to a home insurance policy, and it's super cheap. So I want to say, if I remember correctly, the stat was 90%, maybe 80% of the homes were underinsured in Marshall Fire. It had nothing to do, in my opinion, defense of the agents. We all have access to tools called replacement cost estimators to help us kind of get a rough gauge when setting the initial amount. But ultimately, it comes down to what the homeowner feels comfortable with. If you want a home insured for a certain amount, make sure you advise the agent that that's what you want it insured for, and make sure you're adding on that extended replacement cost coverage as well.
How do I know what that number is? Because the land has value.
Yep.
Right? So you don't need, if my house costs $1 million, I don't need $1 million of coverage, right? So how do I figure out, where does that replacement cost estimator come from?
Yeah, so the estimate is based off of the rebuild of the home. You're 100% right. The land value has nothing to do with it. So a lot of the times, specifically, in a community like Boulder, you take a lot of the same houses in Boulder, you move them into Thornton, the property's worth, a quarter, maybe a half.
Mm-hmm.
So that land value definitely plays a significant role in the valuation of the replacement cost.
And the insurance company or provider is the one that does the replacement cost estimate?
Yeah, so they all contract with different tools that agents have access to on the back end. Again, it's just kind of a starting point. Client really needs to make sure that they're feeling comfortable, and the only true way to do that, insurance agents aren't builders. If you're truly wanting to know what your home would cost to rebuild, I would suggest reaching out to a builder and hammering home that number.
That makes sense. How do you work? So when you meet with a new client, how does that process look? What can they expect?
Yeah.
How do you present them with all of the really important information in their policy? I'm curious about that.
Yeah, education's super important to us. When I got my start in insurance, it was very salesy, had to produce to keep my job. That's not how I feel like things should be done. As a fellow consumer, I like when people are educational and don't harass me after the fact. So that's how we operate. People fill out our application. We'll then shop all of our carriers, find what we feel like is the best value. Having all the important coverages that are add-ons. Then we send clients a video proposal that talks about why we chose this carrier, what coverages we have on here that are optional coverages, and then why we added those coverages. So that way everyone knows what the heck they're paying for on a monthly basis.
Yeah, that makes sense. That's cool. I like the video component. I think that's a really nice add, especially for the brokerage model, because my perception of the brokerage model is that it's maybe just different than a different experience than having an agent. So you're actually showing me that even in the brokerage model, you are their agent, right?
Yeah.
And is that also the case after they've done a policy with you and 4 or 5 months in, they have questions or need to file a claim, let's say, heaven forbid, are you involved in that, or do you push them back to the 1-800 number of their carrier?
Yeah, great question. So we always want to be a claim consultant, essentially. Like, hey, if there's a claim, don't automatically just call into the carrier because it might bite you in the butt. You do not want to use your home insurance in this environment right now for what we would consider a smaller claim, because carriers are not hesitating to drop people. So call us, see if it makes sense. We'll walk you through it, guide you through, what kind of contractor you should call to get an estimate before you do file that claim, to see if it is something you should handle out of pocket. If it does make sense to file a claim, the carriers don't want us handling claims. They don't want us saying anything like, yeah, that's covered, that's not covered.
That makes
We have
sense.
to pass people over to the carriers, and then they do start the claim process.
That's cool. So you're like consulting them with your insurance knowledge to protect your clients, right?
Yep.
But then ultimately, if you're like, yes, you need to file a claim, then you're kind of saying, okay, go ahead and call and file your claim.
Yep.
But you have already kind of consulted with that
Yep,
client.
exactly.
That's cool.
Yep.
That's really cool. I feel like that's a unique part of your business that I've not, and maybe I just haven't interacted with enough people in your same exact business structure. But I think it's cool that you're very education based in the beginning. You're doing the video content, and then you're also like, hey, I'm here as a consultant when something comes up before you file a claim. I think I'm like a big fan of your business.
We
It's cool.
appreciate that.
It's cool. So Neil, is there any light at the end of the tunnel? Is it always going to be like this, or what can we expect in the future as it relates to insurance?
Yeah, so I'm glad you bring this up, because we've actually had a lot of conversations with carriers lately. Most of them feel like once we get wind and hail deductibles under control, that will probably start to stabilize the market. For example, right now, if you file I guess older policies have $1,000 deductible maybe for a wind and hail storm. In Colorado, look out the window. You never know when we're going to get hail. So they're putting up a lot of brand new roofs for people. When you're putting on thousands of roofs a year, and carriers are losing thousands of dollars, they have to come up with ways to push some of that burden back onto the clients. So again, we're seeing much higher deductibles. We're seeing percentage-based wind and hail deductibles, maybe 1% of the dwelling insurance amount. We're seeing, maybe 5,000. Some carriers are even going up to a 2%. But most of our carriers have said once they stabilize and get, the roof passed back onto the homeowner, that we should hopefully start to see rates settle down, because that is one of the biggest causes of loss for carriers.
That's cool. Okay, so there's light at the end of the tunnel. That's
Yep.
nice, which is nice to hear. I have another question. So we're doing a real estate transaction, and the roof comes up as an inspection item, right? And we're supposed to close in a week because we've been negotiating inspection and everybody wants to close. It's urgent. Let's close. Is it true to say that we close and then the new buyer can file a claim for that hailstorm?
Yeah, nope. It's all about the time the policy was enforced and the date of loss. So, you definitely never want to rely on, I'll just file a claim for previous hail damage. You have to have hail has started when you own that home. And a lot of the times too, the carriers will go back. This is when the inspection that the insurance company is going to do. Likely if that home had hail damage, that policy is going to have gotten canceled. So, realtors that are out there in the field, be the advocate for the client, take note of all this, use it to your advantage with regards to concessions and stuff like that.
Oh, interesting.
So, speaking with regards to the other things that realtors can take note of when they're out there, the tree overhang, foundational cracks, if you see significant sinking of the driveway, anything that looks like it could possibly be a hindrance to cause, bodily injury to somebody or damage to the home, realtors should really take note of that and reach out to an insurance professional and ask them how they think this might affect the insurability of the home. Because we don't want clients getting into a home and then being blindsided with a home cancellation.
Do you like taking those calls
Yeah,
from
we love
insurance
it.
agents?
Absolutely.
Okay, so we can direct them your way to ask.
Yes.
Okay.
Yep. We look at it as, hey, we're fellow consumers. We want everyone to be treated just like we do as a fellow consumer. Call us, ask us these questions. We never want anyone in a bad situation after they do one of the most exciting things that they've ever done, which is purchasing a home and then being devastated with some sort of large financial loss.
Yeah. Something else that I've heard about from some of my agent partners is defensible space.
Yeah.
Help me understand that.
Yeah. Defensible space is essentially how much defensible space is around a home should a wildfire come. If you have trees leaning up against the home and a fire burns through, it's going to catch all the trees on fire, touch another tree, touch your house, boom, it's burning to the ground. So defensible space, depending on the location of a home, it's usually a minimum of 20 feet up to possibly 1,000 feet. We've seen, some pretty sizable requests from insurance companies, if they're in a high brush area, if they can even qualify for insurance in that brush area. But that might be something that they say, hey, as long as you cut out, XYZ feet of defensible space, we'll insure the home.
Got it. Okay. So you can actually improve your defensible
Yep.
space. Okay.
Yep.
Okay. And that's feedback that they give you, like, we will insure you under these conditions.
Yeah.
Okay.
Yep.
Neil, this has been so wildly educational. Like, I'm long overdue to have a chat with you because this was all like really new, relevant stuff that will help me advise my business partners and clients. So thank you for
You're very welcome.
your time and for putting good content out for people to
Yeah, I
hear.
appreciate you having me, and thank you so much.